Welcome back to Trading 360. I'm Nicole Petallides. Time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Scott Bauer, CEO at Prosper Trading Academy. Thank you both for being with us. Before we get to Lululemon, sure. Scott, tell me a little bit about how you're feeling about this market. We just had Jay Woods on, who still feels it's a buy the dip kind of market between now and the end of the year. What are you watching?
You know, I definitely agree with Jay. I think you have to be a little bit cautious. You know, you can't just say, okay, we're down 1%, so it's time to buy. You do have to be a little bit tactical about it and respect technicals, respect moving averages. But absolutely, you know, the market is set up for a run higher into the end of the year. That doesn't mean we're not going to have chop along the way here. But look where the 10-year is, and I'm really focused on that, Nicole. The 10-year at 4%, who would have thought a few weeks ago when it was down at 360 that the market would be okay with it, that the market would be just fine? So I think the market is accepting of better economic numbers that are coming out. The Fed is still going to cut, maybe not as quickly as everybody thought, but here we are. So I agree with Jay.
Okay, so that being said, let's get to Lululemon. Some of your thoughts there.
Absolutely. And, you know, there's a shift in the technicals here after a very, very long bearish run in this stock. And the stock is showing some signs of life, and it's now really kind of pivoting and anchoring above that 50-day moving average. And it looks like buyers are really trying to come in on, you talk about a buy the dip here, on any little bit of a sell-off here. Buyers are coming in. This could lift the name back to the $300 level. With you know, retail season coming up here, coming into the holidays, this is definitely a name at the top of my list of the retailers here. And I really think this thing could make a nice run up. So I'm going out about 3 weeks or so to the November 1st expiration. And I'm looking at the 285, 295 call spread, which I want to buy for about $2.50. Great reward to risk. And I think the economic backdrop supports this.
Okay, so, you know, the question, it is the holiday season. As I look at this chart here, you know, not too far off 226, that lows. What do you think here when you take a look here at this, Rick Ducat?
Definitely a chart that has been in decline for a while here. And when we look at it, we can see that we had this rather severe gap down here on earnings. That's kind of the start of our most recent downward pattern here, kind of a wedge type shape here. 2 trend lines converging toward each other, one going across the highs, one going across the lows. It did look a little dangerous for a bit there when we did hit those yearly lows near 226 because we slipped below that lower boundary. However, we have made a series of higher lows from that point here. You can see now our new pattern that we're focusing on is our 2 white dashed lines here, which are once again more of a wedge type shape converging toward each other here. Some other things to note, RSI has been improving here. We can see that we crossed out of that oversold area. We've got a green trend line in play here. We are above the 50 midline, so a bit more geared toward the upside. We can also see that we passed above some important technical points. We've got our volume profile point of control, this thick red line here. That's the area of heaviest trading. We made our way above that. We made our way above the 21-day EMA. We are on pace to close above our orange 63-day EMA today. We also filled this gap that we formed right here near about 268, and we are trading above it once again here. If we were to keep moving higher, this boundary here, we've got our upper line of our wedge shape here, and then the area that Scott mentioned, 295 was another point that I had. That's a high point that we had right here. That seems like an interesting place to consider some resistance. Also got a volume node close ahead. Ultimately, though, this high right here, 337, would be one area for the bulls to clear to the upside. To the downside, lows, light green line here, low points, 246, and then ultimately 226, our 52-week low for further support.
So they have to watch China. I mean, that's a big, thank you for all of that, Rick. They have to watch China, according to Morgan Stanley. We did see a call. Morgan Stanley maintained the overweight with a $314 target. It's at 273. Scott, final thoughts on this name?
I mean, Rick covered it perfectly. You know, the charts that I was looking at, very similar to what Rick pointed out. So if this bullish momentum can continue, because we've cleared out some of that bearish, you know, downside that we had, I agree, and I think that 295 is definitely within reach.
All right. BTIG came out and actually said buy Affirm, sell Amex. Tell me some of your thoughts on Affirm today.
Well, again, here's another one coming up to the big shopping holiday season that, people, buy now, pay later. And this one really could come into play. It was upgraded today, as you mentioned, and it just pivoted near their swing low, which is also right near the 200-day moving average. So short-term demand here, I believe, can really carry this momentum if the stock can recover and stay above this 42 level. I mean, we're right there. This is really a very pivotal moment for this stock here. If so, I really think that next move is 45 and then 47. So with that being said, I'm buying the November 8th, so I get 1 month on this spread, 42-47 call spread. I can do that, right around $1.25, $1.20, somewhere in that range there, gives me really good reward to risk.
Yeah, and within that note, to your point about the holiday season is coming up, within the BTIG note, they did actually say that Affirm was taking market share from some of the other traditional payments that we would normally use, and that would be namely American Express. Let's see what Rick has to say about the chart, please.
When we look at this one, we can see another longer-term downward trend has been reversed here. You can see starting all the way back here with those yearly highs, 52.48. We trended down for a while here, and then we stopped kind of right on the nose at that trend line before this earnings event. Nice gap upward here, made a series of higher highs and higher lows once again. Took out our volume profile point of control, took out our 63-day EMA. Now today, we are making a push to the upside and overtaking our yellow 21-day exponential moving average here. So there's some bullish developments to be sure here. However, there's some other things that we maybe need to consider. First of all, as we did have this upward trend line beginning here, price has moved beyond it. The uptrend that we had initially had our eye on is no longer in play. That does not mean we are crashing or anything like that here, because we did manage to hang on at our red line here, our volume profile point of control, often a key support or resistance area here. You can also see this high point I marked, our green line here, 39.25. That was one area of interest here, and we did kind of hang on for the most part above that area. If we were to keep moving higher here, that would be what the bulls would want to see, obviously, because now we would want to recapture some ground on our RSI here, trending lower. We had a little bit of a bearish divergence here with price making new higher closes, but RSI trending downward here. So the bulls would want to recapture some of that momentum, invalidate the downward trend line, hopefully push into the overbought area. Now, some points to watch here. Scott had mentioned 47. That's roughly around this area here. So we'd want to kind of push above that lone red candle there that we had that upswing for. And then this area right here, another high near 50. That would be another point where we would want to get a surge above and perhaps an energetic breakout to the downside. Volume profile point of control, and then our orange 63-day EMA, 36.50 to 38.50 or so. And then you can see here we had a couple highs, light green line, 34.13. That would be another point to watch.
Yeah, I love it. He's showing us all the important points to watch there. Final thoughts on this name, and then we'll get to Marathon Petroleum. Scott?
Again, I think there's a lot behind this BTIG report about, the holiday season coming up. And given where the consumer is, not in a great place, but I don't think as dire as some people had thought, that buy now, pay later, I think, is going to be really rocking and rolling this season.
Yeah, JP Morgan, a neutral on Marathon, a 172 target. BMO Capital at a price target of 190, down from 200, but does maintain its outperform rating. Where do you think MPC is headed?
All right, so this one, along with many of the stocks in the energy sector here, are so volatile right now, and for good reason, right? You've got so many factors contributing to these big moves, whether it's geopolitical risk, whether it is demand pressures coming from across the country, or not across the country, but across the world, basically, and oil-related stocks that they've just been on a tear recently, right? Especially because of geopolitical risks. And I think you had to take advantage of some of that volatility. just as I think you have to do on this big pullback that we're seeing this morning. MPC is now trading down to a massive consolidation range, a massive congestion level, something Rick likes to look at as well, right around this 160 area, just kind of dip below there right now. So this has been really big support since the beginning of the year. I believe the upside rally was overdone, and I believe this sharp pullback today is overdone as well. We're at about a 15% drawdown today. So since option premium is so expensive, implied volatility is so expensive right now, I'm bullish, but I want to sell a put spread rather than buying premium. So I'm selling next week's, the October 18th expiration, 160, 155 put spread. I can collect $2.25, and the break even on that out to next week is 157.75. I love that area for big support at MPC.
Okay. Look, we've had a lot of action in oil, that's for sure, but you think that some of the reactions are too drastic. Let's see what Rick says about the charts, please, Rick.
Drastic is definitely a good word to describe today's price action. Anyone who's been trading for a while can tell you it is not an easy game. It's not an easy way to make a buck here. One of the most frustrating and difficult situations in trading is basically what happened right here. The false breakout, the big surge to the upside. We cleared some resistance points here. We broke above our all three of our moving averages in pretty much one fell swoop. We broke out of our trend line here. We broke above our volume profile point of control, whatever, so many things we breached above, and then you went long hoping for the breakout, and you just got crushed over the past few days, retreating all the way back down to this green line near 157.50. False breakout, so frustrating, so difficult. But now perhaps there's another opportunity here because it looks like the supportive area is holding so far today. So that after that rapid about face, we can see that RSI once again has returned to the boundaries of our kind of more triangular pattern here, where we had this downward sloping red line and our upward sloping green line here. So once again back below the 50 midline as well here. So long-term downward trend, our blue line here still in play. One quick thing to point out too, we did have the highs right here. It looked like a pretty good example of a head and shoulders type shape here, almost like a textbook definition here with the accompanying bad, severe move to the downside there. So, that one played out as the technicians would have expected. So just an interesting example to keep in mind here. If we break below our support, if we move lower, the old lows from right here, our light green line would come in right about here at this big volume node near like 149 here. If we get our act together, move back upward, we got some heavy lifting to do. All three of these moving averages and our trend line between like 165 to 169. And the real area that we would want to retake would be this red line here. We topped out a few times, 183.50. That would be kind of the sign of a new breakout beyond this range and a new uptrend. Yeah.
I don't know if they ever settled with the Teamsters union either. They had an issue late September. I don't know if that was, if any of you know whether or not they settled with that. That was something sort of an overhang. It is the #1 loser on the S&P 500 today. Final thought, Scott, on MPC?
And that area that he was just pointing out, the 157, 158, which is that congestion, that support area, if you go back about 9 months, even a little bit further, that was previous resistance. One of the things that we kind of look for is previous resistance can now become support and vice versa. So I love this play at MPC. I wouldn't just buy the stock outright and be long it. That's why I'm using a put spread so I can completely define my risk.
Okay. Scott Bauer, Prosper Trading Academy, and our own Rick Ducat there on the charts for the big three today. Thank you both so much. We had Lululemon, Affirm, and Marathon Petroleum. Thanks.